In this lesson, we're going to be going over what are billing indicators in SAP in joint venture accounting. So first, just go back as to where our billing indicator came from, is once the expenses are done. So we incurred $100,000 and then it goes to the cutback program, and then we find out that the partner owes us $30,000. So he receives a bill from us. Now the bill comprises of a lot of things. It's not just going to have how much he owed us for $30,000. It will have things like previous month you owed us $50,000, you paid $20,000, maybe $10,000 is suspense, $10,000 was equity adjustment. There's going to be all these different sort of details on there. So some of those are like, for example, cash call requests, where we are actually asking our partner for an advance. So there's a lot of expenses coming up. So rather than waiting till those expenses actually happen and we pay the vendor, we ask our partners for an advance. That's called a cash call. So that's going to come up on your bill. Then there's reclassifications, then there's normal expenditures, and then there's audit adjustments, and then there's tax. Then it's cash call received, meaning we asked our partner for, say, $10,000 as an advanced payment. That's the cash call, and then from there, he paid us $5,000. So all that is going to show up on the bill. And finally, the bill is going to look like this. This is going to be your company's logo, and this is, say, invoice for a certain month, and so on. And this is, again, giving you all your information if your partner has increased. Where do they contact? And they're going to have information like the venture number and so on. And then you can see it's not that clear, but I'm sure you can still read it a little bit. Let me see if I can zoom in a bit. Cash call. Okay, that might be slightly better. So here you see there's audit adjustments and there's revenue direct venture. Venture directs, then here's the net expenditure for this venture. So we're going to show the partner, hey, the total we spent, $62,000, your share was 30% of that. You already paid some money through cash calls and so on. So they have all these different sort of breakdowns, and then finally you're saying this is your net expenditure, and this bill is usually of many, many pages. It has breakdown of each and every single venture, and this bill at times certain partners prefer hard copy, like you're seeing now. Other partners prefer a hard copy plus an electronic file, where we export all that data into a text file and upload it onto a site where they can view it, usually JI-Blink. So I'm giving you this background to go to billing indicators. So a billing indicator is created in SAP, and each of these you see audit adjustments. This is going to have one billing indicator behind the scenes, and so if a posting is happening and that has a billing indicator too, and when this program runs, that's how it knows that all the postings that had a billing indicator 2 go to audit adjustments, and then billing indicator 3 go to revenue direct and so on. So billing indicator is a way of classifying expenses, so it makes it much easier for the partner to read all his expenses. It makes more sense, and he's going to pay you back in time. So now let's go to configuration. Joint venture accounting, and then under master data. Previously we did recovery indicators. Now it's billing indicator. Click on master data, and then we're just going to create a few indicators here. Sometimes SAP does come with standard indicators. You can use that and then just create your Z1s. Let's check to see if there are any standards. So there are no standard entries. Click on new entries here, and then we're going to click on billing indicator 1, 2, 3, 4. Let's just create 5 indicators. Then we can have names for all of these. Like this would be cash call request. This will be cash call payment. So here is where we ask them for $1,000, and then they paid us, say, $500, or maybe they paid us $1,000. We want to see that on the bill separately. Then there's cash call reclassification, and then there could be direct expenses. These are just normal expenditures, and then you have expenditure audit adjustment, and all this information is going to come from your business. You can talk to them and ask them, how do you want your bill to look like? Maybe we can just have a little bit more. Here we can have tax, and then here we can have revenue. We're not going to use all these in our postings. We'll probably just use a couple, but this is to give you an idea of all our different expenses that we have. So I've added all these entries. Now there's lots of boxes over here. You can always click on a box and then click on F1 and see if it gives you a detailed explanation. So this is telling you this element indicates when a billing indicator is taxable. Any expenditure assigned to this indicator will form the basis for tax calculation where appropriate. So you're going to click on this whenever you want certain billing indicator to be taxable. For example, all your expenditures, you want them to be taxable. You want to click on that, and then after that, you have these tax lines. Again, you can also click on F1 and see what it says, but basically this is used to post tax lines to partners. We'll go ahead and select the line that we want for tax line. So let's say cash call reclassification is going to be for tax line, and then this one is for revenue indicator. So you want to select that for revenue, and then this is for cash call payments. And again, you click on this and then click on F1 if you're not sure what it stands for. This indicator allows a grouping of billing indicators defined for cash call payment. So in this, basically, generally you'll only require one billing indicator to post cash call payments, but you should consider the entire context of configuring your company cash calls. So this is an indicator that if billing indicator is being defined, will be used to post cash call payments from partners. So if a partner is going to pay you for your cash call, if you initially request for $1,000 or not $1,000, let's say $1 million, because there's lots of expenses coming up, and that partner is now going to pay you, say, $500,000 or $300,000 for your cash call. So when you do that, you're going to use a certain billing indicator, and that time you want to be using this checkbox. So I'm going to check this cash call payment, and then finally you have convenience netting. So convenience netting, what it does is that it's going to take your expenses. So I'm going to bill the partner, say $10,000 for all the expenses. Now that partner would have paid us $5,000 for our cash calls and then $3,000 of normal payment. And finally, he owes us $2,000. So what convenience netting does is it takes all his open items, the expenses and the revenue, and then nets it. And then, so finally you know that the partner only owes us $2,000. So this is a way of making the bill much simpler rather than sending 100 items where he owes you and you owe him, and finally you get to the bottom of how much he owes us. We can do that simply by netting all those open items against each other, and for that we'll be using the convenience netting feature. So that's pretty much it. From here, you're going to click on Save, and then it's going to be saved. Now these billing indicators we'll be using in future classes when we're actually going to start billing the partners. So that's it for this lesson. I'll talk to you guys in the next class.